General Motors' latest shareholder letter sent shockwaves through the auto industry. On May 29, 2025, the company revealed that President Trump's new 25% tariffs on imported vehicles and components could wipe out as much as $5 billion in earnings this year. This wasn't just a line on a balance sheet, it quickly rippled from Wall Street to factory floors. Within weeks, GM began cutting shifts, furloughing workers, and even shuttering assembly lines from Detroit to Ontario. Analysts slashed profit forecasts, and investors sent GM's stock lower as the reality of tariff costs set in. The administration had billed tariffs as a tool to boost American manufacturing. But for GM, whose supply chain is deeply global, the impact was immediate and painful. About 40% of its parts come from overseas, leaving nearly every vehicle it builds exposed to higher costs. Even after the White House offered modest credits and capped overlapping duties, the relief amounted to just 3%. GM calculated that each pickup truck was suddenly $3,200 more expensive to build. At first, the company tried to absorb the costs. But by mid-year, with margins tightening, prices at dealerships had to rise. In Detroit, GM's Factory Zero plant was idled in April, sending 200 workers home. Soon after, more shutdown spread to Ontario, sidelining over 1,000 employees at GM's Kami plant. By May, layoffs hit the Oshawa plant, wiping out another 700 jobs. Suppliers felt the shock too. Adient, a major parts maker, shuttered 2 Tennessee factories, cutting 400 jobs as GM's orders dried up. Executives described this as elastic idling, temporary stoppages meant to resume later. But for workers and communities, a temporary halt still means lost paychecks, vanishing customers at local diners, and growing anxiety. Economists now warn that if these disruptions continue, up to 50,000 North American auto jobs could be at risk. The pain isn't limited to gas-powered vehicles. GM's electric ambitions have hit major roadblocks as well. The repeal of federal EV tax credits and stalled funding for charging stations stripped away incentives that once fueled demand. On top of that, tariffs extended into battery minerals like lithium and rare earth metals, raising costs for GM's Ultium batteries. Factory Zero, once celebrated as the centerpiece of GM's electric future, now sits partly filled with unsold EVs under plastic covers. Internal data shows that while last year 14% of GM customers considered an EV, today that number has fallen to just 7%. GM's CFO admitted the company would need to sell 100,000 electric trucks a year just to break even, but projections for 2025 suggest only 65,000 will be sold. Each unsold EV ties up tens of thousands of dollars, while batteries slowly degrade in storage. The human side of this crisis is equally stark. Workers caught in rolling furloughs live with the uncertainty of whether their plant will restart or shut down for good. Memories of Lordstown's closure in 2019, where a temporary idle became permanent, hang heavy. Toolboxes are packed, ready to move if needed. Even union leaders are split. UAW President Shawn Fain praised tariffs as protecting American jobs, while Canadian labor leaders accused GM of sacrificing workers north of the border. On the ground, some employees who once welcomed tariffs now question whether they're worth the lost wages. Meanwhile, other automakers face similar struggles. Stellantis has repeatedly slowed its Canadian minivan production, while Volvo's truck plants in the US have warned of possible layoffs as semi-truck prices climb by $15,000 due to tariffs. Global supply chains are being strained as parts cross borders multiple times, each crossing now carrying risks of delays or fees. A single paperwork error recently cost one supplier $1.2 million in unexpected duties. Inside GM's headquarters, executives are mapping out best, middle, and worst-case scenarios. In the best case, supply chains stabilize and production ramps up again by late summer. In the middle case, tariffs expand to electronics, raising costs even further. And in the worst case, rare earth mineral exports from China are cut off entirely, halting battery production and paralyzing GM's assembly lines. For now, GM is cutting costs and scaling back, but even billions in savings can't fill the $5 billion hole tariffs have blown in its balance sheet. What was meant as a policy to bring jobs back has, at least for now, left factories idle and workers uncertain about their futures. Whether those assembly lines roar back to life, or remain silent, depends on decisions far beyond the factory floor. This is True Estate Report. Thanks for watching. We'll see you in the next video.